Hello and welcome to the channel Market Chart Pattern. Today we'll be reviewing the three stocks which we have been following for quite a while. These are Apple, Tesla, and Amazon. Before we proceed, this video is for educational purposes only and it is not a financial advice. Okay, so what we are looking at is the daily chart of Apple. And if you have been following our channel or if you are new, then please do look at some of the past videos which we have done on these stocks, particularly Apple. Um, we had identified this zone as a support zone, and we had some targets even below that as well. There is this lower trend support line. Other than that, the key one was this a bigger ABCD, which is in this purple line, completing around this level. And we had a few other Fibonacci levels coming together, which I will show you at the weekly chart. So now we have had a pretty nice bounce of that support structure, and what we're looking at as a first kind of a resistance level is the 136 level. Also, what is important to note is this rally was the last rally where the rally failed and the market moved lower. And if we have this one is a little bit comparable to it, but within this decline, this is the largest rally which we had. So if this bottom is to hold, what we are really looking for is this symmetry to be broken. And as a first resistance, we have around 136. But further up, we have between 144 to around 146 as another possible resistance zone which the stock must overcome in order for it to move higher, because that would indicate that the previous decline was about this much and the stock has moved higher, so that bearish symmetry is likely over. Okay, so let's also take a look at Apple on the weekly chart. So this is the weekly chart of Apple, and here we see that big ABCD completing around in this region, so the stock came very close to it, and this one is the real deal. I'll show you what this is. This is the 38.2% Fibonacci retracement going back all the way to the 2019 low, and this came in around 126.50. And what did the stock do? The stock went lower, closed higher, but last week was still a negative week. And this week, it's a fairly positive momentum. The price obviously took the highs of the last week and closed stronger right into the upper region. So that's a good price action. And what we're also looking at is that you can see around here, this 128 level was also a very strong level because there were so many Fibonacci ratios coming together at this level. And what the price actually has done is, if you look at closely, price did on a weekly basis test this level but never closed below this level. So that's an important point. So it you can think of this as actually a double bottom. So essentially what this is, a double bottom in my books. Okay, so very rarely do we get perfect double bottoms and double tops, but this one is close enough, and in my books this is actually a double bottom. And if you ever do analysis of Apple yourself, you'll find that key bottoms have been formed when Apple has just come back and tested a bottom. So it kind of forms a double bottom. Go back and have a look at the price action in 2016. Okay, so let's go back and have a look at Tesla. Okay, so boom, this is the daily chart of Tesla. Okay, and long in advance we had mentioned that there was a possible strong support for Tesla coming around 105. So we actually made a video about it. It's available. You guys can have a look. And in that we will explain what was the kind of pattern that we were looking at. I'll try to go over it on the weekly chart as well. Um, but one thing which is really key about this stock is what we are looking at, um, is where could be the next potential kind of resistance, which it must overtake in order to negate its bearish symmetry. So what we have is this one, two. These were the kind of rallies which took place in this decline. The highest one was this one, and the other rally is this one and this one. They were identical in their amplitude. So in terms of the number of points they ran for, they were identical. This one was the highest one. So what we are looking for is, for in order for the stock to break its bearish symmetry, the stock must ideally break above in a convincing way and stay above 150 151 dollars per share level. That would mean that okay, that British bearish symmetry was broken. It's still possible for the stock to come back and try to test the lows, um, but it would be a good indication that that bearish symmetry is actually broken, and perhaps this could be a nice bottom. So taking a look at this stock on the weekly basis, so all what we were really looking for was around 105 level, was because of this bigger one-to-one projection A, B, C, D. So essentially what it is you take this much decline you projected from the next one, and it came around here. Also, this happened to be a 78.6% Fibonacci retracement level. So we had a nice confluence level of the ABCD structure and a Fibonacci ratio coming together. And this is what we wrote in advance, that 105 is likely to be a good support level. And in fact, till now, the support seems to have held. So that's a good sign. Okay, so now what we're gonna do is take a look at the Amazon stock. Okay, so this is the weekly chart of the Amazon stock, and we'll just go back to the daily chart where we have more kind of technical analysis done on this. But essentially, what it is just a double bottom, essentially. So it just went and tested the lows of March 2020, and so far this double bottom seems to have held. And look at how strong the price action has been over the last week. And just for kicks and giggles, we have the 38.2% retracement coming around 105. So we'll see how the stock will behave around that. But the good thing will be that it would have taken this swing out. So that's going to be quite nice. But let's have a look at the stock on a daily chart. So um, we have done a video just on Amazon, which you can find in our archive. Yeah, in that we just went through this entire price action structure since March of 2020. And one thing we were trying to highlight was that if you look at this entire um, price action, what it is it's just a really big trading range. And we also identified key areas where we have seen the stock go into a very long trading range. So this one was in September 2020 and it lasted into May of 2021. And what you can see is that investors or traders were selling the top of the range, they were buying the bottom of the range. Um, Here, selling the top of the range, buying the bottom of the range, selling top of the range. So the stocks likes to do double tops and double bottoms. So this is a double bottom here, this is a double top here, and then we have another very long trading range here. Again, it formed a double top and then we had a massive decline. And now what we have here is a potential double bottom, which we wrote in advance. In that video, we just covered all of that. But one of the key reasons why we were pointing out that is this a double bottom in Amazon is also because we had this one-to-one projection structure, which we like to call ABCD, coming together around this region. So just blowing the chart up a little bit, what you'll see is we in the blue line you see this ABCD, so that's this entire um, decline. You take that and you project it from this one, and we get a region, a price target in that region of where the double bottom, potential double bottom happen. And also within this larger ABCD, we had a smaller ABCD identified in the black line. So we had a confluence of quite a few things coming together, which gave us good confidence that this is an important level to be watching and potentially a double bottom in the stock of Amazon. Okay, so we were also watching for some potential resistance levels on a shorter term basis. So this one seems to it has taken this high out, so that's a good sign. From this swing, we have just gone above the 38.2% retracement level, which is also a good sign. And if in the next few days the stock keeps on moving higher, and it takes this out on in a convincing way for at least a couple of days, that is a very positive sign for the stock. And we could see the stock rally into 106, even 113, and we'll see if 120 is, the stock is able to take out 120. Okay, so this is what we are watching. If you like our videos and how we analyze the markets here, then please do subscribe to the channel. Good luck and good trading.